Good evening, traders from across the globe. Thank you, as always, for tuning in to my 2227th edition of Short-Term Trading Live with Oscar Carboni. Traders, coming at you Sunday night, this video for trading Sunday night through Monday. That would be February 2nd or February 22nd, 2021. So basically it's for trading Sunday night through Monday into the close on Monday afternoon. I've got some interesting topics on the board, but before we go there, please remember, this is a very risky game. Trading futures, stocks, ETFs, options, you name it. If you trade it these days, the volatility is extreme, and so too is the risk. Please put protective stops in first before you even begin to put the trade on. So that means I want to buy any stock, XXX. Well, that could be a stock. I want to buy blank, blank, blank stock. I think if it goes down $5, I would like out. Well, you put your sell stop in $5 lower first, then you put your trade on, and you'll be much safer that way. You'll never be caught up in a big debacle where you're in a trade, you had no stop. Stop goes in first. Got that? If you'll do that, then come with me. Come on, and let's see what's going to happen. Let's get some trading done Sunday night through Monday. So, right off the bat, once again, for Feb 22nd, regarding the OMNI S&P, NASDAQ, Dow, Russell, Transportation Average, the indices, OMNI is offering very mixed signals at this, what I call, interesting juncture on the chart. And I will show that chart to you very shortly. But interesting juncture we are at on the daily chart regarding these, especially the ES. And we'll trade whatever sets up first, but you'll see what I'm talking about when you see those charts. Secondly, and really big, Bitcoin approaching the second target of 60,000. Tell me how many doesn't kick ass in Bitcoin. First target was 35,000. Boom, we hit. Then we increased the target to 60,000. We're this close. And once we hit 60, I will reassess, make a new projection, and see if we are going higher. And if so, how high Bitcoin can go. So let's hit 60 first. We're almost there. Then we'll re-project what comes next. Looking around at stocks and at all of these up here, the indices, Tesla is looking testy up here, technically, if you ask me. Tesla looking testy, technically. You like that? That's what I see when I look at the chart, and I'll show that to you. And I think one of the reasons why Tesla is looking testy on the chart and OMNI S&P is hitting an interesting juncture, which could be bearish if it can't get away from it, is because of number 4 on the board, traders. T-bonds and interest rates. That is the big story here. Wait till I show you the charts. The market, if interest rates go up, the market will feel it. The market will come back down a little. Why would that be? Let's take it away from trading, looking at your phone. You got 10 grand in your account, and you're crapping in your pants. Let's take it away from those traders, okay? Let's take it to much, much bigger, wealthier funds or traders or private family offices and funds, which there are trillions of dollars in that. You can take let's say your family's made billions of dollars and it's in a trust and now it's been handed down to you and it's your job to not get crazy with that money. While the interest rate has been practically zero, you've got to put that money to work, making more money. But that money going to work is always at risk. However, if the bonds government guaranteed return goes up, people with a lot of money take it right out of the risk and put it back in bonds where it's guaranteed to come back to them with interest. Why? Because they've already made billions. They don't want to turn into millionaires. They want to stay billionaires. So you take money out of risk and put it in bonds when bond interest rates start to go up. Now you keep that in mind. Bonds and interest rates is the big story here. Tesla, laden in debt, as we know. If interest rates are going up, Tesla certainly is going to begin to feel a little bit of that. If interest rates are going up, OMNI S&P and companies that make up the OMNI S&P, a lot of them have debt, and they will feel it a little. And then just the fact that you pull money out of things like the S&P and slam it into bonds, when bonds pays enough to make the risk reward worth it, that will weigh on a market as well. So what I'm telling you is we need to keep our eyes on the bond market and interest rates here. As long as they don't go crazy and interest rates don't rise quickly, we're fine. If that starts to happen, we will have a problem. Traders, I'm going to show you some charts right now to prove out everything on this board. Remember this. When you are going to trade, when you put those stops in, when your money is on the line, say this to yourselves every morning, every afternoon, every evening, and you know what that is. Are you with me, kids? Don't worry, the video is not over yet. Stops are in. Emotions are out. Say that to yourselves. Get those stops in first and don't do anything crazy to lose your money. It's okay to lose as a professional. It's not okay to make stupid mistakes. Stops in first, it'll save a lot of them. So, I'm about to show you the charts now, as I mentioned, that coincide with everything on this board. Traders, I would ask you to subscribe to these YouTube videos. Take a second now. I'm just going to wait. That's it, subscribe, or I'm not going to speak. What do you think? Think they subscribed yet? Takes a click, right? All right, now that all of you in the world have just subscribed, I know all of you did just now, even the president, everyone just did, I will show you some charts. Let's go, kids, and take a look. Traders, Bitcoin, Bitcoin, Bitcoin. How sick is this? Remember, I had the guts to go in with my own money. We were all the way down here, and I mentioned we'd have a target of 35,000 in the year 2021. Well, first week of the year 2021, we literally hit the target. We reassessed, and we reprojected a target of 60,000. Look how close we are to 60,000 right now. The high was here on Friday. It's going to open higher probably tonight and head towards that target. So we are almost there. Once we hit that target, then I can step back and reassess and see what the next projection is. But for now, Bitcoin, Bitcoin, Bitcoin. Go, baby, go. Rock and roll on that one. Then you've got the E-mini S&P. Interesting juncture. Traders, if you've seen my last 3 or 4 videos, guess what you've seen in my last 3 or 4 videos? A chart that looks exactly like this and says, interesting juncture. How many days have we been having trouble now? Well, about the same amount of days have I been producing this in the video. Because it's obvious, right? When you run into something like this, you've got to understand it's going to make resistance until it doesn't. And in these cases, it does make resistance. So, should that happen? Well, that's kind of what we're supposed to expect over getting through, which is what makes that interesting. Now, take something as large as Tesla, and Tesla, if you ask me, with all the magic I've thrown on this chart, some things I'll turn to when I really want to get technical and see if a market is possibly changing direction. This indicator base, a few things happening here. As you can see, if just looking at this, it's on a downward slope at the moment, right? Doesn't mean it's on a big bull flag, but for now it's on a downward slope. You had this resistant, or I should call it support. You had this wonderful support, which held here, and held here, and held here along the blue line. You are now through that. This is some form of a bear flag forming right here. You've got that going on. You've got the 2 averages that have come together above what looks like a bear flag. And the whole thing seems to be turning down, as you can see with the outer layers of the envelope. So, looks like pressure is starting to mount on Tesla. Now, once again, if this is a big bull flag, which it very well could be, flagpole here, flag there, well then, so what? We're at the bottom of a flag and it should hold. But if this isn't a bull flag, if this is a turn coming, and the indicators are pointing towards it being a turn coming, and this is actually a little bear flag, downwards we should go. Now, with the thought of E-mini S&P and other indices giving mixed signals and being at an interesting juncture, which is creating resistance, Tesla looking a little bit testy up here, and the bear flag, you've got something like this. The big picture, in my opinion, technically, is what we are seeing in bonds. Look at how, for months and months now, bonds have been going down. Sort of makes a channel and dumps, makes a channel and dumps, a channel or a flag and dumps. Makes a channel, breaks, makes a channel, breaks, makes a channel, it just continues. However, you do know that when bonds go down, interest rates go up. You know that, right? IR. Interest rates go up when bonds go down. So, bonds have been going down. Interest rates inherently are moving up. Look at the same chart now, except for out to a weekly. Now I'm going to show you what the big picture looks like. Again, if bonds are going up, interest rates go down. Consider that a teeter-totter. You're in the park, you're out in the schoolyard. There's a seesaw or a teeter-totter. Interest rates go down when bonds go up. And bonds, since 2017, this chart goes back, nice bull market. A little bit of a pullback, nice bull market. Then, and inside this nice channel, bull channel, interest rates go lower. Right? Bull channel bonds, interest rates go lower. We had a blow-off top, or what's better known as capitulation here in the bonds. And look what's formed since. Now we're starting to show a bearish channel. Bear channel, interest rates move higher. Interest rates are now here. As bonds go down, interest rates go up. The exact opposite of what was going on here. So this is real. This is what happened. The Fed does not have to come out and lower or raise rates. When bonds move, if the bond market drops fast enough, rates go up without the Fed doing anything. In fact, you can push bonds down so quickly, if that's what happened in a scenario, the Fed would have to come out and lower rates just to keep up with traders that could sell this all the way down. That is a scenario that does take place from time to time. The government actually has to go out there and defend its own position against traders. So this is showing us that maybe the music is starting to slow down, if not quiet down a bit, or even come to an end. Because while interest rates were going down, it forces up the stock market, it forces up everything. But when interest rates start to go up, you can take your money out of risky stuff and put it right there. So keep an eye on that. The very same chart. This is the big gorilla in the room. Very same chart with my OMNI average. Hasn't been below the OMNI average in several years, but it is now at the top of a channel. The average meets the top of a channel. Bonds start getting more bearish. Again, that means interest rates go up when bonds go down. Keep an eye on that, kids. I'm not saying it's for tomorrow. Bigger picture, it's a weekly chart. You keep your eye on that. Oscar knows what he's talking about. More about this in the future.